have a target,
Yeah.
it'll get you there. Whereas right now, what I'm noticing, I mean, not even right now, it's always been like this. I think that now it's just at the forefront a little bit more with social media. There was the rise of the retail investor during COVID, so it's a lot more at the forefront where people are just trying to, like, apps like Robinhood and, Coinbase, everybody's able to do it with their phone. So now, people were kind of frivolous with their money, especially kind of going back to before. Money was cheap, money was free. So people were taking...
People were getting checks from the government.
Getting a check from the government.
Yeah.
They were taking that. They were dumping a G note into whatever, and it would go to zero. They wouldn't care.
GameStop.
Yeah, games
To
like
the moon.
Exactly, right, to the moon.
Yeah.
So people were trying to do that, and they kind of lost sight and lost track of, well, what was your goal? Like, what are you trying to do here? What are you aiming for?
But I think the avenue of, and this is what kind of separates yourself, and I think this is where you have the added value. Robinhood, from what I understand from what Robinhood is, and I don't have the application.
Yeah.
I look at it as like a gambling app, to be honest. I see it as the equivalent of like sports gambling.
Like
Your odds are probably a little bit better than sports gambling, but to the same extent, it's really fun. It's an interactive app. I'm sure it's addictive.
Yeah.
I'm sure it's like there's all these things. They do a really good job of making the app entertaining, that's for sure. But I think it's a different highway. You're in a different lane.
Yeah.
Whereas, and I think, and one of the values of having a financial planner or someone who works in wealth management, such as yourself, it's that a lot of people aren't disciplined enough to invest themselves because their emotions get in the way.
Yeah.
And they buy when the stock's too high and they sell
Yeah.
when it's too low.
Yeah.
And whereas your professionalism, or what you guys kind of like specialize in, you're kind of there to kind of tell people, no, trust me, let me handle your money. I'm the professional here. I'll take control of this. And that's probably why you guys, have a lot of success. And not only yourself, people like in your industry.
Yeah, for sure.
That's kind of what it is.
I'm oftentimes just walking people off a ledge, like not a real physical ledge,
Yeah.
but in their mind, they're like, oh my God, everything's going to zero. We got to sell. And I'm just like, nah, man, like
Yeah.
take a step back, breathe.
Yeah.
You know what I mean? Like, we're not doing that.
That's like for what's going on. I'm super, again, most of my wealth is tied up in the company, so I don't really care. But it's just like I do care to some extent. But in the stock market right now, I agree with you 100%. I'm looking at all these prices, going, I'd love to get on this. This is like, look at all these great companies selling at a discount.
Yeah.
I don't look at it as going, oh my God, such and such a stock is down 70%.
Yeah.
I look at it as going, oh my God, this stock's at a 30% discount.
Yeah.
Which is what I think people should be looking at.
Yeah, and when you take out that short-term mindset, you don't really care. I hope the market continues to come down, because again, as somebody who's investing new capital, as a buyer, you're just buying really good companies at lower and lower prices.
Yep.
You extrapolate that over the next 20 years, all of those values will be exponentially higher than what they were today.
Yeah.
So, just don't focus don't focus on the short term. Find some value. I read this thing the other day where growth companies, you make money with growth stocks when you sell, and you make money on value stocks when you buy. When you buy them, right? And so what that is to say is that if you buy Amazon at $100 today or $90 tomorrow.
Is Amazon still considered a growth share, or is it more
Amazon's
of a value
growth.
share?
Amazon's
It's still growth.
Yeah, it's still growth. But like anyway, I keep saying Amazon just because it's just one
Everyone
of
knows
the
it, yeah.
everyone knows it. But that you bought it at 100 or 90 in 10 years, you're selling it at 400, right? So you're making your money on the sell. Whereas more of a value stock, like something maybe a more mature company like Coca-Cola, for example, again, you're trying to find that you're actually the value comes at where you bought it, because you're not going to get those extreme gains in a company like that, right?
But you'll get the dividends, you'll get the
exactly. So right now, all to say again, just more reasons to be like, buy, just get in there, and buy strong companies or good positions. And if you don't want to buy an individual position, I advocate for active management. ETFs are great. Mutual funds are awesome. I'm not the smartest guy out there. I defer to smarter people than me. And there are fund managers that are like Harvard graduates, MIT graduates that are managing these awesome funds that if you don't necessarily, believe, in Tesla, but you believe in that sector, you can buy the sector. You know what I mean? Like you hedge yourself that way and just give your money to a fund manager that's got a better track record, you know, and like have a good mix of stuff like that. You know, don't just have individual positions. Buy a little bit of this, a little bit of the, diversify yourself. It's just, all these things are just recipes for success in the long term. And so you kind of just got to do away with that short-term mindset. Like, I don't try and compete with anyone that, you know, wants to make 1,000 into 30,000 overnight, like with a penny stock. I'm not that guy, you know, and somebody might be that guy, and that's fine.
Well, it's you're gambling,
right?
You're gambling. That's not investing. In my opinion, I don't call that investing.
Yeah, that's gambling.
Yeah,
that's gambling.